Steve. Good day.
It was a good day. February picked off right where January ended. The major indexes had pretty strong gains. The Dow finished up about 83 points. You see a chart right there.
That says 83 points up. Great, brilliant work.
You know, it was the big driver today was basically the global manufacturing picture. We saw reports around the world, here in the U.S. as well as in Europe, basically saying that the manufacturing is not only stabilizing but actually picking up, and so you know, it just goes along with the recent reports that we've seen about, you know, economic improvement, especially here in the U.S. And so you saw some strong gains in Europe. Once the U.S. opened, we kind of followed suit, and the gains petered out a little bit toward the end, but still a fairly substantial update here.
It's sounding optimistic. Did you buy it?
Well, earnings across a number of companies have been relatively good. The news out of Europe is not as tragic, perhaps, as we were expecting.
It's still awful, though, in Europe. The situation in Europe is just not as bad. It's not as awful. It's just awful.
Well, the other thing to think about, Simon, is that we are subsidizing perhaps the performance in the stock markets today with what the Fed is doing now. And so we see the 10-year below 1.9% yield. You have to wonder when that sort of price tag comes due, which has been a long-standing concern for a number of people in the markets. But at least for now, it kind of is working.
It kind of is working, exactly. I mean, considering the gains that we had in January, you know, it's been a really sharp rise here, and stock investors are getting pretty optimistic. Stock investors are typically more optimistic than the bond investors, but what you're seeing here is sort of this, you know, with the 10-year.
Maybe the bond investors have done some research. Is my line. But what about this ADP payroll figures? They do an estimate of the number of jobs created in the economy, and they revised down their December figure considerably. This was no small amount. This wasn't a couple of thousand. This was down.
Well, first, their January figure came in at 170,000, which is right around what economists were expecting. But you're right. The previous month, for December, they originally said that 325,000 jobs were created that month. Now they brought it down to about 292. So yeah, that is a considerable drop. But again, that ADP report is a little shaky as to how reliable it is compared to the government's report. You know, you had, you know, they were forecasting 325,000 jobs in December. The government reported 200,000 jobs were added. So, you know, a strong month. Both readings are strong, but there is still a huge difference between the two. So looking forward to Friday, though, economists are expecting about 125,000 jobs added. That is not as good as what we saw in the previous month, but
it's just ain't good enough, is it, Dennis?
But you know, now expectations are kind of being reset to the upside, and so
the bar has been so low for so long.
But let's be real. It's 125,000. Even if it does hit that mark, it isn't good enough because it doesn't take account of population growth.
That is correct, and doesn't take into account the flood of graduates and non-graduates of young people who are coming into the labor force. However, markets don't always live by a straight line logic, as your brain does, Simon.
Wow, that's the first time my mind has ever been accused of having straight line logic, and I want it noted because that's great. Thank you so much. That is so cool. I think that's the height of my day. Thank you, Steve Russolillo.